The California Mortgage Relief Program is finally here, and that means up to $80,000 per home for homeowners who are behind on payments. We're going to run through how this program works. We're going to show you how to figure out if you're eligible for the California Mortgage Relief Program. And stick around to the end because we're going to give you a phone number for additional help in case you need it that isn't easy to find unless you know where to look. Hey there. Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers and tenants and landlords with the best advice to survive these crazy days in California and beyond. And we're here with a big update on the California Mortgage Relief Program. So first off is, where did these funds come from? Well, they were in the American Rescue Plan that passed in March 11th, 2021. There was $10 billion that was set aside. The state of California has received $1 billion of that, and they're rolling it out to eligible homeowners. A few important points about this program. It is absolutely free. There is no cost to apply to the California Mortgage Relief Program. The money that comes from the California Mortgage Relief Program is a grant and does not need to be paid back. Of course, you need to talk with your tax advisor to see if there are any income tax implications. Another important point is the money is sent directly to your mortgage servicer. It doesn't get sent to any homeowner. The money will go from the California Mortgage Relief Program directly to the mortgage servicer. So if you're ready to dive into applying for $80,000 for the California Mortgage Relief Program, hit that like button. And let's get started. Where do we go to find the California Mortgage Relief Program? You can go to camortgagerelief.org or my favorite website, one of them, housingiskey.com. So if you've seen my other videos about rental assistance, that's the same website, and they now have the California Mortgage Relief Program. They have links on that same site. So here we are at housingiskey.com. So you see on the left-hand side, talks about the rental assistance program, and they still are accepting applications. So that would be landlords and tenants, when tenants who are behind on rent. And on the right-hand side, we have the California Mortgage Relief Program. There are 6 different languages, and you're going to get started by clicking on Apply Now. When you click the button, here you are. You're at the California Mortgage Relief Program website. This is where you're going to go to start the process to determine eligibility. So we are going to discuss exactly how to determine eligibility. And there's a lot of different steps to it. This is not for the faint of heart, but it is worth doing to get a crack at that $80,000. One of the first steps is you're going to want to figure out if your income qualifies for the program. So you want to be at 100% of the area median income or less. So they have a calculator here that's pretty handy. You type in your county in Orange County and then the number of people in your household. And that's literally the entire number. So I have me and my wife and my 4 kids. I put down 6, and it will show me based on Orange County, where I live, and the size of my household, what 100% of the area median income would be. And for a household side of 6, it's $156,050. So you're going to do that for your county and for the number of people in your household. Now, to figure out the income, it would be the income that everybody who's 18 and over is bringing in. So in my case, husband, wife, and my oldest daughter, who's 18, we'd add up all that income and see if it falls under the $156,50 or less. All right, so there's a lot more to this. We're going to keep going on the eligibility, but stick with me. We're going to try to make this as easy as possible. So over to the right here, we've done our calculation on the area median income. It's looking good so far. When we apply, we're going to need proof of that income. So any pay stubs you have, if you're receiving unemployment, you need that. Any income you're receiving, you're going to have to upload that documentation. They will also need tax returns and bank statements, so make sure you have that. More to determining eligibility. So next, you need to look through this list, and then we're going to click in and dive deeper, so you don't have to read all this. But if you're receiving public assistance, that could be unemployment, WIC, Section 8, for example, public assistance from the national, state, or local level, then you will be able to apply for this. If you're severely housing burdened, what this means, according to this program, is when you add up your mortgage, insurance, and tax payment and divide that into your income, if that payment is more than 40% of your income, then you are considered severely housing burdened, and you can apply to this program. The other thing you need, and you don't need all three, you need any one of these three. The other would be there's no alternative. You've been in forbearance and you can't take advantage of any other programs, or you're not in forbearance. You can't take advantage, for example, of a loan modification, and any sort of loan forgiveness. Your servicer is not going to be able to give you any of those. You need one of these three that we just ran through in order to apply. And now we've clicked the button to see more about eligibility. And this is important. We're going to run through these and then we're going to take a little test before we get to the application. It's not a test I'm giving. You'll see it's a test that the website gives. So we already covered number one, which is household income. We already did the calculator. So this is important. The homeowner must be at least 2 payments behind by December 27th, 2021. And that's essentially the date that this program was approved. So if you're missing payments, if you start missing payments in January of 2022, it's too late. You have to have at least 2 payments missed before in either 2020 or 2021. You must own and occupy the California home as a primary residence, and you can only have one piece of real estate, and that's the home you live in. If you have an investment property in addition to your primary residence, you are disqualified from this program. You can only own one piece of real estate, and that piece of real estate must be your primary residence. And there's more qualifications to that piece of real estate that we're going to go into. You also must experience a qualified financial hardship that led to missing those payments. And the qualified financial hardship must be after January 21st, 2020. There will be an attestation, a document that you have to sign for this. And the hardship is either a reduction in income. So COVID affected the income you're making, you lost your job, or there was a reduction in the amount of pay you were bringing home, and or an increase in your living expenses because of healthcare or needing to take care of another family member, etc., or cost of goods have gone up. Those are considered hardships that will qualify for this. And then there's 2 more, and this is where it starts to get very complicated, and this is going to take some work on your part in order to apply for the program. We'll skip to the easier one, the last one. Basically, you can't have assets on hand or cash, assets being money market accounts or things easily liquidated. That money on hand cannot exceed the relief funds plus $20,000. So if you're going for $80,000 and you've got $150,000 or even $101,000 in the bank, you will not qualify for this program because that's the amount you're going after, the 80 plus the 20. And you do the math. If you're going after 5,000 in these funds plus 20, so you can't have liquid assets of 25,000 or more in the bank. The other key to this is retirement accounts don't apply. They're not going to look at retirement accounts and use those funds. All right, let's circle back to the confusing one. So the original unpaid principal balance on the loan must be, and this is the primary mortgage, this is the first mortgage, must be lower than the conforming loan limit at the time of origination. So this is somewhat complicated. You're going to have to go back to the paperwork when you got the loan, determine when the loan was originated, so the date that the loan came through for the real estate you're purchasing. And then you need to look at that amount and make sure it falls below the conforming loan limits at the time. And there's a link you can click here that will take you to find the conforming loan limits. Here's a quick tutorial when you click that conforming loan limits button. So this is where it takes you. You come to the conforming loan limits page from the FHFA, and you are going to go ahead and remember, you've already looked up when the origination date is for your loan, and you've looked up how much that is. So now we've got to compare to see how it compares to the conforming loan limits. So you'll see all these different charts. There's going to be a bunch of Excel spreadsheets. In here it says the year. So let's say your loan you got in 2015. So you're going to click on the Excel spreadsheet and that's going to download. You open up the Excel spreadsheet and you're going to have every county in the United States. So you're going to quickly get to California and you're going to find your county there. I'm already there in California. So for Orange County 2015, the conforming loan limit was $625,500. So as long as my first mortgage was $625,500 or less, then I'm fine and I can apply for this program. So far, so good. So far, you're passing the tests. You're ready to go. Go ahead and click the Get Started button and it'll take us to the next steps. So now we're going to take a little test. It's going to ask us a bunch of questions. And we've already been asked some of these questions. So yes, there was a hardship. Yes, we've missed those mortgage payments. Yes, we only have one residential property. Yes, it's our primary residence. You're going through checking these. The next one, yes, it's on your primary mortgage loan, your first. The last one, if you check this, it won't work for you. You will not be eligible for the program. And that is a business is listed as the homeowner on my mortgage. This is incredibly rare. It's very rare because most of the conventional lenders don't allow a business LLC, LP, for example, to adopt a loan or to get a loan. They have to go to other resources. So do not check this box unless it's true. And if you do check this box, you will not be eligible. So then you put in a property zip code. We'll use 92660 Newport Beach. And then you're going to put in the type of home. So single family home, condo, townhome would fall under condo, or a manufactured home that's permanently attached. Those are the only eligible properties. If you click anything else, so even if you live in a duplex, you live in one of the units, triplex, fourplex, or you have a manufactured home that's not permanently attached, you're not going to be eligible for the program. So that's important to understand. It's only going to be single family homes, condos, townhomes, and mobile homes that are permanently attached to their foundation. We should get an A. Looks like we may be eligible. We still have more to do. So we're going to go ahead and click the start application. From there, you're going to go ahead and create an account in this portal, and you're going to go ahead and start a new application. And this is where you're going to dive in and have a whole lot more questions to answer. So be prepared with your paperwork. A lot of this stuff you'll know off the top of your head. In fact, a lot of this stuff you're going to be answering again that you've already answered. So go ahead and run through this. So the income verification will be where you put in your any pay stubs you have, if you're receiving unemployment, etc. It's going to go in there. There will be a hardship statement where you talk about exactly what happened, whether it was a reduction in income and or an increase in expenses. It's going to ask you for any assistance that you've received. It's going to need additional documentation, tax returns, bank statements. You're going to have to sign an authorization allowing a third party to do work on your behalf, which is the California Mortgage Relief Program, to work with your servicer. There will be additional information about fair housing. The outreach program is related to your servicer. Your mortgage servicer will be able to reach out to you to talk about additional ways to work through loan modification, etc. And then the attestation as well will be filled out at the end. As mentioned, the funds will go directly from the California Mortgage Relief Program to your mortgage servicer. So that's the company that you've been making the payments to, or in this case, haven't been able to make payments to. You've been working with them perhaps on a forbearance or loan mod. That servicer must be one of the providers that is signed up for the program, and the list is growing. This is a link on their website. You'll see a lot of the biggest servicers are already in here, and there will be more that are coming. You should encourage your servicer to join in if you don't see them on this list, or if you call up and ask them about the program and they say they're not part of it. Definitely encourage them to join. Make sure you check out this link on their website as well, and I have it below in the description. Make sure you watch out for scams related to this program. They are already anticipating that there will be scammers out there looking to make money off of folks. So read through this. It gives some good advice. It's important to note that there is no charge for this program. So if someone's asking you for money to help with the application or saying there's an application fee, that's just not true. And there's other important things on here. Don't transfer the deed to your home. If people say they're housing counselors, attorneys, or they're from the government, a lot of good advice on here. Be very, very suspicious and careful. This is a program from the state of California that will pay money directly to your servicer. They will not give money to you at all. So make sure that you don't fall for a scam involving funds supposedly coming to you. Make sure you don't sign any paperwork you don't understand at all, and be careful out there. And if you do find somebody that you're convinced is a scammer or up to no good with this, there's a phone number you can call to report them as well. So please be very careful. This is a great program for those that are eligible, but there will be plenty of people out there trying to take advantage of others. And thanks for sticking around. We promise to give you a phone number that you can't find anywhere else, but you can find it when you do an application, and that number is down here. It's 1-888-840-2594. When you call that number, you'll be able to enter an extension when you have a case manager assigned. When you press 1, you can get help resetting your password or setting up an online account. 2 is going to give you information on completing or submitting an application. 3 will be to check on the status of your application. And 4, that's an important one. This would be for anybody who has questions. General inquiries, including eligibility. So that is a special phone number that you can use to answer your questions. And remember, we can't give tax or legal advice, but for the most honest and up-to-date real estate advice, subscribe to this channel. And make sure you do, because we're going to have a lot more great content coming around the California Mortgage Relief Program, plus the California Rental Assistance Program, and a whole lot more for buyers and sellers and tenants and landlords. We have a free weekly email newsletter, comes out on Sundays. We have a link below so you can subscribe to that. And make sure you check out this next video for more on the housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we appreciate you.